Hey guys, it's your boy Odale, and this video I think is going to be like an intro into risk management. I would like to say that everything I say is my opinion and is not direct advice to go out and do all these things. It's just idea, opinion, and hopefully it helps some people, hopefully it doesn't, but it is not me telling you to go out there and gamble or risk anything. But one thing I like is that as a stock trader, you consistently have to understand risk to reward ratio. And from the moment you could understand risk to reward ratio, you're going to give yourself a great opportunity to be successful in the marketplace. So, one game that I suggested you play, obviously, it's my opinion. I would suggest that you try to play poker, even if it is recreationally. I used to play quite a bit a few years ago in New York City before it was really really popular. We used to play, small games among some friends, but it's more legalized now, I believe. And a lot of people, you see, they're popping up a lot of gentlemen's clubs, a lot of little games that you could just go spend like $300. You can win like 2,000 if you grab everything. But everybody's getting into it. But it's been a game that I learned since I was a kid. I'm not a professional, but I try to use it as a guide to how I should be trading as well. So if you were to download this game, it's a poker game. It's poker. It just says poker, and you start off with like 10K, and over here the NPC or the computer is not that difficult, and as you go up, you go to these bigger tournaments. I'm already at 700 million. I would say that just for the sake of this video, I would do something like just, usually the rule of thumb is, and I want you guys to apply this in your trading as well, is that if you have 700 million, what is 10% of that, or even 3%, like real investors will risk like 1 to 3%. So, but just for the sake of this video, I'm more of an aggressive style trader. So sometimes I'm risking 10%. But when I go into that 10%, most of the times I'm not risking the full 10% during the game. So if I go in with 10% of this is like 70 million. So I would have to go into a game that costs 70 million. There are no games that cost 70 million. There is a game that costs 20 million. That is closer in line to 3% risk. So I could go into this game and I could have no worries at all about losing 20 million. Losing 20 million does not affect me. And that's how you want to have your approach going into investing, right? You want to make sure that whatever you're investing, you could lose it comfortably, right? So the main thing you're going to learn about poker is that you want to know the best hand, which is obviously a royal flush. You go straight flush. I'm looking at the left side of the screen. Four of a kind, full house. That's the hand rankings on the left side of the screen. And something you're going to have to remember, and I'm not too much of a mathematician, but there are a lot of players that would see uh, these two cars and they would see that they have one, two, three, four of the guys in the room, on a table, and they would automatically know a percentage of like what hands they have, who's bluffing, So this is something players do. They raise, because this person, Sarah, thinks she possibly has a good hand. And you don't really know you have a good hand until you see what comes on the board. So I don't usually let players I don't like to raise that much. I do if my hand is really good, but so like in this case I may raise a bit because I have queen and ace. Those are, it is, ace is the highest ranking single card you could have. And coming onto the flop, which is when they put the cards on the table, the first three cards, I see that I already have a matching pair. So I have a matching pair, and for me, I could bet. I'm kind of just seeing what my opponent has. So now we see queen, jack. It doesn't really enhance my hand, but I still have queen and ace, which is pretty good. If they have a king, obviously, it means I'm out of luck. Out of luck if she has a king. So she has an ace and a five. I have a higher hand. So it's all about beating your opponent's hand. And the whole thing about poker gets intricate. You want to know the probability. So as a trader, you want to know what's the probability of your trade being successful. So you're going to do a process of risk analysis where that you have to have traded enough to know what type of setup is going to make you the most money. You have to start analyzing patterns. We're retail traders. We're on the retail side of this shit. We have a lot less information. We rely heavily on technical indicators. Of course, you have a lot of fundamental resources you could rely on: SEC filings, news of the day, all these different things, which I'm going to keep going into a little more deeper. But I think it's interesting that people understand risk management, that, hey, this is gambling. I would call it gambling, but you could be a calculated gambler, because let's just say you have $100, right? And you're gambling 10 cents every day. And every 3 games, you're losing that 10 cents. But every 7 games, you're actually winning 15 cents. How profitable are you going to be long term? You're going to be very profitable long term, because you're winning more than you're losing, right? So the whole thing about it is low risk, winning more than you're losing. This is what makes investors profitable. This is what makes people successful in all aspects of life, not just trading, investing, the real estate market. You always want to be aware of your risk to reward ratio. So let's get back into the game. So we have a jack and a 6. Jack is like, you have ace, you have king, you have queen, and you have jack. So it's like the fourth strongest hand, but it's paired with a 6. So it's not really that strong. It's strong, but it's not that really strong. But immediately on the flop, I got jack and I got 6. So I'm going to put some pressure on these guys to see what they have, if they have anything. Also, he thinks that he has a better hand than me. So I'm going to go all in. I don't think he has a better hand. It's highly unlikely he has a better hand than me, even with the king. You see, so it's just knowing that, hey, I don't think he has a better hand than me, because I already see the jack and the 6. He's bluffing. That was a bluff. Immediately I know that. And, by analyzing what's on the board, you could analyze kind of what your opponent has in his hand. And that's how you want to approach it. You want to know. You don't always want to go, like some people will make you, they'll try to raise just to kind of scare you when they have a good hand. Like he had king and jack, which is useless, because I had jack and 6, which is the 2 pairs that came up on the board. So you just have to understand that I like to get to see what's up on the board. If I can't see what was flopped, sorry, I don't know the 100% terminology. I'm like a recreational player, but there are a lot of terms you could go into. But I'm a recreational player. But I'm just gonna say, before they put the 3 cards on the table, some players love to bet big. I don't really like that. I like to see what's up there. And, when you know what's up there, it increases your chance exponentially to know how much to risk. So I'm going to be folding a lot of times if I don't see what's on the board and people are betting heavily, you know. All right, so let's get back into some more stock trading talk. So basically, a lot of traders, like you're gonna see, like a lot of hedge funds were blown out between 2023 to 2024, even 2022, because they had too much exposure. The more exposure you have, is very highly likely that any type of weakness in the market, you could be wiped out. So your cash exposure, which is the amount of money that you're gonna put to trade, like let's say you have $1 million. Let me use a smaller amount, which is more realistic. Let's say you have a $5,000 account. If your daily exposure is $500, it's highly unlikely that you're going to lose all your money. That's just the whole gist of it. And why I say $500 exposure, like if we use the rule of 10% of 10%, $5,000, 10% of that is $500. 10% of $500 is $50. So really, you're looking for trades that you could risk $50, which is 1% of $5,000, and you're going to look to see if you could create an opportunity that you can make at least 20-30% on that $500. It's realistic, you know. Not everybody's going to agree with me, but our experience is that there are certain patterns that you could take advantage of, that you could make a lot of money. You know, you can make a lot of money, but you have to memorize these patterns. You know, they say retail traders have no real power in this market, but the chart patterns are popping up day in and day out, day in and day out. They keep popping up. So it's your job to really study. You don't have to study with real money. Firstly, you could do demo trading. Demo trading is basically using fake money, and you could analyze the market months over months. You know, it's an investment. Like going to become a trader, it's an investment. You have to spend time, and you have to spend effort to really do it, you know, and it's a rewarding process. But even if you're not going to be a trader, an investor, you know, everyone should be an investor. You should be able to analyze companies that you like. Firstly, you have to find something you like. Like I love food, so I'm always analyzing food stocks. So anytime a new food stock is going to IPO, I'm analyzing, and you know, I want to know how profitable this company can be, because it's very interesting to see how well food stocks do, because most people pile into food because it's something they know. You know, the more you invest in things you know, you actually increase your profitability in it. So it's very interesting to find your niche. That's something you want to do. Find your niche and invest in it. And definitely invest in it. Find your niche and invest in it. It's important that you do that. My niche is food stocks, and I like some. I don't like biotechnology stocks. I might like technology stocks as well. It's not my expertise, but I kind of like technology. So, but food is my number one expertise. Food and like banking stocks. I could know when a banking stock is gonna do pretty well as well. But damn, she is calling 5-6-10 Jack on the board. It's not really good for me. I don't think I'm gonna call that one. Let's see what we got. I'm getting to the end of the game, so I'll finish the game and then we'll continue talking. So I got double aces here. That's a good hand, and this player next to me has been kind of slamming me. So I want to really capitalize on my good hands, you know, and see if I could take advantage of her. This is not a good flop for me. She's raising. I'm good. I'm good on that. The game has gone to the point where, you know, any little mistake is going to cost you. That's what I like about this style of poker. So now I have a 7, I have a 9, and I have an ace. I'm on the board. I got 7 and 5. I'm going to call just to see what's the next card. But if it doesn't fall in my favor, and she checks that one. So I'm going to wait. So that was a good call. Sometimes it's a good call. And she's calling as well. I don't think she was bluffing. See, sometimes they're bluffing. That's insane. She's been getting the better of me, but you know, we're coming to the end, so you want to be cautious. So I got 8 and 5. I got a pair of fives. It's already flush. There's not much I can do to win this hand unless if she has flush. So you hear I'm going through my mind. If she has flush meaning so that's spades. If she has 2 spades in her hand, then she's gonna be flush, you know, and that's like the 1, 2, 3, 4. That's the 5th highest ranking hand. In order to beat her, I would need 4 of a kind. What's the probability of me getting 4 of a kind when 3 cards are already up? I can't get 4 of a kind. Really, I think it's a low probability for me to get 4 of a kind. I can, but it's very low because I need 5 and I need 5 to come after. I can beat her with a full house, which also I don't think is going to happen. But since we're at the end of the game, it costs $5 million to call. I'm going to see what comes next. So it's not a good hand for me. As 4 comes up next, she's going to call. She probably has flush. I'm gonna fold because I could save that money for another round. I'm gonna call this one. Okay, so you see that I see I got spades. I have an ace of spades, and I got 10 of spades. There is like, I think like a 20%, even might be a bit lower, 10 to 20% chance that the next two cards, the next card could be a spade, and that would mean I would flush draw. So $19 million for the chance of winning, I'll take it. Okay, so she won that one. She got a 10, but it didn't come flush draw. Sometimes it does, sometimes it doesn't. But we're at the end of the game, and now this is where you kind of want to. I put a little bit of pressure on her because it's so close. This game is so close. It's not a good hand for me. Yeah, I'm not gonna call that. See, it's a difficult space to be in, close to the end of the game, when your opponent, one bad play takes you out of the game. And now I'm making a decision. Does she have ace really? Huh. I don't know if she has ace. For me, I'm going to fold. But the next hand means that I got to go all in. And luckily, this is actually a good hand, but it doesn't guarantee a win. I'm going to go all in. She's going to call. Oh, shit. She wins. So poker, very, very interesting game. Very, very interesting game. You don't always win. I still come in second place. I win 40 million. Like, if you make it to the end of the game, you're gonna make some money. You don't always have to win the whole game to really be a top guy. If you come in second place, you're gonna win some money. In the biggest tournaments in the world, second place, third place, they have money because I think the world, those big poker championships, you have like the gold bracelet, the silver bracelet, all those different types of things. So, I'm not into it like that. It's just a game I'm fascinated with because it is a big part of risk management. Obviously some of you guys can be very great poker players, and that would be amazing. But I'm just a guy who plays poker recreationally. Maybe once I got some more free time, I might play some of the tournaments, but I'm not going to go crazy. Some of the millionaires, they go crazy. They play really expensive tournaments, and they win a lot of money, and you could lose a lot of money. This could be very stressful. But once you understand losing is part of this game, you're not always going to be 100% right. And you're risking within what you could afford. That's the whole gist of this video. That's what I want to get across to the people watching. Risk what you can afford, and risk in relation to your account. You're going to be very, very good as a long-term investor and a long-term trader in anything. Whatever you want to do, whether it's sports betting, whether it's gambling, risk what you can lose. And what you can lose can sometimes be like $200, $100. It's all in relation to the amount of money you have, and the amount of money you allocate to investing or recreational gambling. But you definitely want to give yourself the opportunity to exponentially increase your money. They have these things out there because they believe that they could take your money from you. But if you go in there with a strategy and a plan, you could also have a big chance of winning. So this is your boy Dolly. This was a little random video I was just testing out, but I just like sharing my ideas, leaving these things out there. So hopefully maybe one day somebody could watch and understand that, hey, these are some good things that you could get into as well, and different perspectives. I love giving my perspective as well because a lot of men are going to have a lot of different perspectives. I just like, as a man, sharing my perspective of the world and everything that's going on.